Consumers spent less money in January as retail sales fell 0.8%, according to numbers released Thursday morning from the Census Bureau. For more analysis on this latest gauge of consumer spending, let's bring in Kevin Cummins, U.S. economist at UBS. And Kevin, it's good to have you on the program. Welcome.
Great having me. Thank you.
So not a great report. Economists said retail sales would fall by 0.5%. They fell even further. I mean, these numbers are still up 3.3% year over year, but why aren't consumers spending more?
Yeah, well, obviously a pretty weak start to consumption in January and to start off 2015 with the headline numbers coming in below expectations, as you mentioned. Some of the details, though, weren't quite as soft as those headline numbers suggested. Gasoline prices in particular were off about 15% on the month, so that pulls these sales or nominal sales. So overall sales are down. If you look at the things that feed into GDP, which is that retail control series, that was up marginally on the month. And it looks like the, data for the fourth quarter were revised up slightly. And that's obviously what the Fed is watching as far as trends in consumer spending. So I think the weakness here on the headline number overstates the underlying details just a bit.
All right, well, spending at gas stations during the month fell 9.3%. No surprise there, given the declines in crude prices. But people didn't seem to use the extra money they're saving at the pump to buy other stuff. I mean, we saw declines in almost every category in the report. And this has happened in previous months where gas prices were still low. So what does that tell us about the economy?
Yeah, well, the consumer really picked up speed in spending in the back half of last year. So you did start to see a little bit of a tail off in December and January as far as consumption. I mean, if you look at fourth quarter GDP, real consumer spending was up at a 4.25% annualized rate. Obviously, consumption makes up about 2/3 or so of the economy, so that really helped GDP growth in the fourth quarter. Consumer confidence has remained pretty high. We'll get another reading on that with the University of Michigan survey tomorrow. We'll see how that comes. It starts off the year. In January, it was at a cyclical high. Last week's jobs data doesn't suggest that you're going to have any sort of real cease in spending at the start of the year. We'll also get real spending, which will probably show an increase for the month of January, despite the weakness in retail sales. Retail sales make up mostly goods. If you factor in services, as utility costs likely picked back up in January due to cooler temperatures, you're likely to see an increase in real consumer spending. So these numbers mask a little bit of the strength that you're likely to see to start the year in consumption.
All right, let's talk briefly about the Fed. This report doesn't necessarily bode well for the economy or for inflation, for that matter. So do you think this makes a stronger case for the central bank to delay a rate hike?
I don't think it's a game changer. Obviously, the Fed is watching consumption pretty closely to make sure that it holds up. But I think you're going to need to see from the Fed some conviction that inflation is going to begin to pick up here. As far as the employment report, those data have been more than strong enough to get the Fed moving. So, you know, we at UBS expect the Fed to begin hiking rates in June, and I don't think this changes or moves the needle on that date.
All right, Kevin, we'll leave it there. Kevin Cummins, U.S. economist at UBS. Thanks for your time this morning.
Great, thanks for having me.
I'm Scott Gamm, and you're watching The Street.